All right, so we're 9:01. So today we have a guest speaker on, Nick. He's with Goosehead Insurance, and we're going to talk about homeowners insurance and basically how it relates to the home buyer process, I guess, of purchasing a house. So, and then there'll be some, I guess, some Q&A at the end if anybody has any questions, or as we go along, you can throw it in the chat too. So, but first we'll start with a little mortgage update and see how we're doing this week, or how we ended last week, I guess, with mortgages. How's it going, Andrew?
Good. Sorry, I didn't realize it was my turn to talk. Yeah. Hey, so for mortgage, based on on what's going on with Ukraine and everything else, there's definitely, concern. What I'm seeing from the tops, from the Fed, from top level people, is we might see a pause on rates going up, but they're going to go up. They're going to start to creep up again in the next few days, definitely into the next couple of weeks. And that's just they're blaming that on, or saying it's going to help work through this inflation situation. Now, the inflation that they talk about as well is probably going to come down in the next few months, because they believe that it's that the things that are causing it are not permanent. So those are two, kind of good, kind of bad. But I think at the same time, what they're also saying is when the inflation gets under control, they believe that rates will start to come back down. I don't think, from what I've seen, I don't think we're going to see rates, get much past what they are now. They could go up and down a little bit, but we're pretty much where we're going to be at, for most of the year. And then towards the end of the year, we're going to see, obviously, with this Ukraine situation, if something changes for the worse, it could end up being worse for us. But the Fed and mortgage industry realizes that, we do need to work with you guys, real estate agents, and the real estate team, to keep moving through houses and selling properties. And, the low rates are going to be a big piece of that. So it's a little bit, on shaky grounds, but I think if you are speaking with your clients, rates today are pretty safe, that they're going to be this way for the next, 90 to 180 days. So, in that aspect, as they are planning to purchase or to start their search, the numbers that they're going to work off of are going to be pretty consistent, and there's no benefit for them financially, definitely not a dramatic benefit to waiting. So because we do believe they'll stay right around this point for the next 6 months. And as we get towards the end of the year, we might see a break in rates. Something, I was told that we're going to see a pretty good break, but honestly, with looking at rates today, if I started quoting that, I feel like people would just think I'm a crazy person. But from the top down, they are claiming that they believe rates will come down to rates that we've seen and been excited about in the past. But like I said, I don't feel confident enough to quote those numbers at the moment. But I think, we're going to be good throughout the year. So the message, I think, is, don't wait, buy, because real estate is still going to go up in value, and rates are not going to fluctuate too much to where your buyers need to be waiting for that great, unicorn rate or perfect mortgage.
Cool. That's good news. Well, that's good information. I don't know if it's good news, but so basically, I think what you're saying is we're kind of hovering around where we think we're going to be for the next 90 to 180 days.
Yep, I think we'll see some fluctuations, and when this would be great news if it accompanied a accepted offer for one of the clients that you're working with. That would be the best news, but right now it's just a number. But
Okay.
it's we're not going to see anything horrible happen. Like even if things in Ukraine get worse, that's not going to reflect a 5 or 6 or 7% interest rate. It's just not going to happen. We're not there.
Yeah.
Um, so yeah, like I said, I think the message is, you do something now because your finances are not going to be, they're not going to change for the better by waiting.
Yeah. Well, I can agree with that. All right, cool. Well, thanks for that. It's good info. And I guess with that, we'll go ahead and start with Nick on what they're going to talk about.
Good morning, everybody. My
Hey,
name is
how's
Nick
it going?
Meigs. I am the agency owner of Goosehead Insurance here in Fresno. Don't be thrown off by the picture there of Gia. That's my girlfriend, who I'm actually using her computer because mine is tied up with something else at the moment. So that's the better looking picture between the two of us. So you guys are definitely winning out on that one. So yeah, thank you so much for having me on. What I was planning on doing real quickly in a nutshell was just kind of giving you an overview on kind of what home insurance is, where it fits into the process, and then just some of the things as they relate to a real estate agent's perspective on a new purchase, some of the things that you can be aware of to kind of help guide your client and just make sure that it's not the insurance piece doesn't become something disruptive at the end of the transaction, because I see that fairly frequently where maybe there were some pretty obvious red flags, obvious to me at least, that could have been easily conveyed to a real estate agent, and all of a sudden we kind of get down to crunch time and escrow, and then something pops up and says, oh, okay, now this is becoming an issue, and it's kind of throwing the deal off. So that's really what I wanted to do, is just equip you guys to be a little bit more aware of that, just with some quick kind of Cliffs Notes types items that you can apply on some of your transactions to hopefully make those just go a little bit smoother. So to start with, just wanted to give you a quick rundown on who I am and my background. So I've been in insurance in different capacities for a long time now, longer than I'd probably like to admit. I have owned my own independent agency now for coming up on 3 years. Before that, I owned a State Farm agency for a year before going independent. Really, all I do is work with real estate agents and loan officers. Probably 98% of my business is referrals, most of those being new home closings. So this is kind of my wheelhouse. So I'm pretty in touch with what's going on with regards to property insurance, particularly in our area. I'm from Fresno, born and raised. So this is kind of my wheelhouse. Now, as far as some of the common questions that I get from real estate agents and from new home buyers as well, right off the bat is, who needs home insurance? Is it something that I have to have? Kind of what does that look like in this transaction? So what I always tell folks is, if there is a mortgage present on the property, you are required to have home insurance. It's obviously a very good idea to have it regardless if you own property, but yes, you are 100% required to have it in place if there is a mortgage on the home. If you do not purchase it yourself, or if you let the policy lapse at some point, your lender will just go get it for you. And that's called forced placed insurance. And that policy generally only covers basically the outstanding balance on the loan for the home, because really what they're looking at is the bank just wants to make sure that if that home burns to the ground, if you still owe $200,000 on it, they're going to get $200,000 back, call it square, and then you can figure out what you're going to do from there. So that is obviously not the advised route to go. As far as when you can start looking, because that's something else that I get, as well as, folks feel like they have to be, a week out from finally closing before they start to get serious about checking for it. And that can kind of hold things up sometimes. I always tell folks, you can look anytime. If you already have an agent that you work with, if you've got your car insurance through Farmers and you trust your Farmers agent, or, your parents have worked with a State Farm agent for 30 years, or, something like that, or your real estate agent referred somebody, you can reach out to them as soon as you find a property that you think is, at least a strong potential fit for you. I would go ahead and just reach out and ask for a quote at that point, because that will help to clear up some of the red flags that you might run into, as well as help your lender, because it's going to make it much easier for them to have, when they're looking at potential debt to income ratio concerns. Now they have a figure of, hey, we think realistically the insurance is going to be $780 a year for this home. Great. It makes it a little bit easier for them to put that into their numbers and work with it. So I always tell folks, kind of the sooner the better. Like I said, if you've got an address that you think you're going to put an offer in, you're pretty serious on this one, go ahead and send it over and get a quote. That shouldn't be an issue for any insurance agent. Can real estate agents request that for their clients? That's another question that I get. Yeah, absolutely. Different carriers require different information to provide accurate quotes. Some want a little bit more detail than others. Some literally just want a name and an address. Generally speaking, about 90% of the carriers out there, if you get permission from your client to request a quote, we're really just going to need the name and date of birth of the folks that are going to be on the title, and then the address that they're purchasing. At that point, I can put together pretty accurate quotes for them and at least give you an idea of, like, personally, the way I work is I'll send over a quote and just say, hey, assuming that the client kind of wants the, kind of the standard coverages in place, we don't have any unusual needs or expectations here, this is what we'd be looking at. And then I'll put some kind of footnotes in saying, if they have like a pit bull or, a dog with a bite history, or if we have, a large gun collection, some unusual things that we need to be aware of, okay, let me know. But assuming that this is, just your standard client and this is a standard new home purchase, here you go. Here's some pretty accurate quotes for you. So I always let real estate agents know, don't hesitate to reach out for those. There's not, anything precluding you from doing that. Then one of the other frequent questions that I get is kind of, what is home insurance? What does it do? Particularly, what is home insurance versus what is a home warranty? So just a quick breakdown on home insurance. There's a few major components. I think the obvious one, of course, is going to be coverage for the dwelling itself, the actual building. Folks often ask, how do I arrive at that amount? Is it just the listing price? Is it, market value for the home? What does that look like? In Fresno and the Central Valley, those numbers are normally pretty close, but the actual insured amount does not depend on the market value. What I'm looking at to determine what we need to cover a home is the replacement cost. So most carriers are going to have a tool where I plug in, the relevant information about a home. So I basically say, hey, here's a home that was built in 1992. It's 2,600 square feet. We have 4 bathrooms. This is roughly the grade of the bathroom. Maybe they have some upgrades to the counters. Maybe there's some upgrades to the flooring in the home. This is the roof material. This is, when it was last updated, and the carriers basically take that information and say, okay, great. We feel like this particular home in this area needs to be covered to, $235 per square foot to adequately rebuild. Here's the coverage amount that we're going with. And then obviously we can make some adjustments to that. But that's one of the things that I get asked most frequently is, hey, I'm purchasing this home for $280,000. You sent a quote over for, $317 in coverage A. Why is that? I just let folks know that's what's going on, is we're looking at the actual amount to completely rebuild the home, including clean up any debris or anything like that, any hazardous waste disposals, depending on kind of what happened to the home. One of the other major coverages is for your personal property. So we're going to cover the building itself, and then we're going to touch on the contents. Most carriers basically just have a default percentage of, hey, if we feel like we need $300,000 for the home, we're going to have an additional 50% of that amount, or $150,000 available for your stuff. There are some sublimits there depending on, what type of items we're talking about. So, jewelry, collectibles, things like that, we might need some additional coverage for those. But generally speaking, if your clients just have kind of the standard, even if they have nice furniture, TV, stereo systems, things like that, that's not something that they're going to need special consideration for. That should generally just be covered in the base policy. And then one of the final big ones that I always like to touch on with folks is loss of use coverage. Loss of use is basically going to pay for you to stay somewhere else if your home is damaged by a covered cause of loss and you can't stay there. A couple of really good examples that you're going to find fairly frequently are water claims. So I've had folks where there's some fairly extensive flooding, if a fixture breaks or something like that, and they're at work all day, they come home and there's, a few inches of water in the home. You can't stay there comfortably for a week or two while they pull the carpet and the padding up, maybe replace some drywall and they dry everything out. That loss of use coverage is going to come in, and that's going to pay for you to stay in a hotel room for a couple of weeks. Now, if it's something more severe, like for example, some of my clients that completely lost their homes or had significant damage to their homes during the Creek Fire, then loss of use is going to pay to rent a home for you. really what the insurance company is looking to do is replicate your current lifestyle as close as they possibly can. So they're going to look for a home that they can rent that's close to your square footage and build quality in your neighborhood. That's not always obviously an option, but that's what they're looking to do. And those are some of the major ones that I touch on with folks. There are obviously some, excuse me, some additional coverages, but those are the big ones.
Now you touched on fire just a bit.
Yeah.
What are you seeing right now? Because I'm hearing a lot of homeowners getting dropped on the fire coverage, or basically not renewed. So what are you kind of seeing with fire and how it's affecting our industry right now as far as insurance wise?
Yeah, it's rough. This is definitely, I would say, after Florida is probably the toughest market in the US because of the tropical windstorm issues that they deal with. I would say California is right behind Florida. When you talk to product reps from, some of the major carriers like, Nationwide, Travelers, some of the national carriers, and you say, hey, kind of what's, your outlook for the market? They say, well, California's kind of its own thing. We're not really hyped about you guys and kind of how things are going right now, but we're figuring it out. So what I'm seeing right now is, a lot of established carriers are non-renewing clients in what traditionally would be considered moderate to high fire areas, I would think. Thankfully, we haven't gotten to the point where I'm seeing a lot of non-renewals in areas like, the Madera Ranchos or kind of the outskirts of Clovis. Those are areas that are getting harder to place new policies. But for the clients that are already there, I'm not seeing them being actually dropped. Once you get up to Auberry, Prather, Coarse Gold, Oakhurst, Bass Lake, some of those areas, that is really becoming difficult to place new business. Now, that being said, and I know that this is I think this is kind of the boogeyman for everybody. There is the California Fair Plan. What the Fair Plan is for those who aren't familiar with it, it's not technically a private insurer. It is a state funded insurance pool that cannot decline homes due to fire risk. So basically, as long as the home is in insurable condition, we're not talking about something with, a massive hole in the roof, it's not dilapidated. As long as it is a home that you can insure, they cannot decline it due to claims history or fire risk. Obviously, the price is not ideal, and the Fair Plan only covers fire, wind, and vandalism claims. So you basically need an accompanying policy that picks up the liability, water, and theft piece of it. So price is not great. The big triggers that really drive up the price with the Fair Plan are being more than 5 miles from a fire department and being more than 1,000 feet from a fire hydrant. Obviously, in our kind of rural areas, the first one sometimes can be an issue, but frequently not. Most of our communities are pretty good about being within 5 miles of a fire station. I don't see that too often. You will with some of the more remote cabins around Shaver Lake and some of those areas. You may see 7 miles from a fire station. The fire hydrant issue, obviously, that's going to impact pricing a lot. Once you get into Auberry, Prather, those types of areas, they don't generally have fire hydrants around. So what I am generally telling realtors and lenders that work in those areas frequently is reach out as soon as you find something that the client might be interested in. Get a quote, and we'll establish, A, whether or not it needs the Fair Plan, and B, whether or not that Fair Plan pricing is in the client's budget. If I had to put a ballpark on it, and again, this would just be kind of your average run-of-the-mill home, 4.5 miles from a fire station, no hydrant around, let's call it, a $350,000 dwelling coverage home. So kind of your, average home, more or less. If we do have to go Fair Plan, I'm usually seeing somewhere around $4,000 a year total for the insurance. Obviously, it can be a little bit more, depending on what we see frequently in the hills is, folks might have a really nice, detached barn, some things like that. So obviously that can drive up the cost. But I just basically tell folks, go ahead and reach out to an insurance person and shop around for those, because carriers all have different guidelines. So for example, I work with like 40 plus different companies. I've got probably 35 of them that as soon as we're looking at even like moderate fire risk, they all drop out. Well, then I've got 4 or 5 others that have significantly different guidelines and a different fire appetite. And then I know, like on top of that, just from my days at State Farm completely does their own thing. So they're almost opposite of everybody else. I always found, homes that everybody else could insure, State Farm wouldn't touch, and then kind of vice versa. So I always tell agents, make sure that you reach out to a few folks. Don't just call AAA and AAA says, hey, it's going to be $6,000 a year, and you kind of walk away at that. If the client's really serious about it, ask a few folks.
Now, let's say the home's not in the high fire area. We're not going to be dealing with the state fund on that.
Mhm.
What have you seen that maybe would disqualify a home for being insured or would cause the rate to go up other than high fire area?
Yeah, that's an excellent question. So some of the, and again, I don't know that really red flag is the right word, but some of the things that I see that can kind of trigger it, that can either make it difficult because there's almost any risk has a company that will insure it. It's just, maybe they're a non-standard carrier. I always tell folks, kind of think of it this way. If you've got 3 or 4 car accidents on your record, you can still get auto insurance. It's just, maybe not going to be with Allstate and the rate might not be fantastic. That's kind of the same thing with home insurance, although frequently it's, obviously not your fault. It's just the property. You can still get it insured. It just might not be with your carrier of choice and the premium might be a little bit higher or the coverages might be a little bit limited. Some of the ones that I'm seeing really frequently right now are, and I think part of that is just because of, we're so short on inventory. I think there's a lot of houses that maybe they wouldn't be sold the way they are now, 5 years ago, but just because of the way the market is, I think folks are willing to make some concessions to get in. Roof age or condition. Those are some big ones. So kind of the rule of thumb for most carriers, and again, it varies company to company, but most carriers are going to say, hey, the roof, if it's not tile, if we're looking at comp, it needs to have been replaced in the last 20 years, or they may request a roof cert where a licensed roof contractor says, hey, the roof is 22 years old, but I'm going to go ahead and sign my name on the dotted line saying we've got another 4 years of life in this thing. If it is wood shake, which thankfully we're not seeing too many of those in the valley, they're still around. Wood shake is kind of a whole other animal that's really going to cut down the number of carriers that will even look at it at this point. There are some out there, and then obviously they micromanage that a little bit more, when they're looking at what is the condition of a wood shake roof. The other big ones obviously are claims history. Now, what I always tell folks is it's kind of counterintuitive, but with some carriers, they don't look at your personal claims history. They look at the address. So, you might have had a water claim at your previous home. Some carriers will take a look at that and go, great, we're not worried about insuring that home. The pipes stay with the home. Conversely, the home that you're purchasing, maybe the prior owner just had a $60,000 water claim a year ago. They may factor that into both the price and the eligibility. So that's part of the reason that I always tell folks, hey, let's take a look at this earlier in the process, because, I've had clients kind of get caught by that at the towards the end of escrow, where all of a sudden, hey, sorry, I know that you wanted to go with Progressive. Progressive is pretty conservative on prior water claims. They're looking at one, from 2 years ago for the prior owner. They're not going to waive that. It's either going to, dramatically increase your rate or you're not qualified with them anymore. And that's obviously not something that you as a realtor or your client can generally know going in. So that's why it's a good idea to touch bases with an insurance carrier. Dog breeds obviously can be a little bit tricky. Kind of the major ones, I think everybody is, not going to be shocked by these. Pit bulls, Rottweilers, wolf hybrids. Those are really kind of the trifecta that are going to be real tough to find coverage for. There are some carriers that'll do it, and there are some carriers that are fine with the dogs being there. They just won't offer liability coverage for anything related to that dog. So they may very well say, hey, we know Trixie is a lap dog. She's adorable. She's a pit bull. Our underwriting guidelines in California say, yep, you can have her. But if something does go sideways and she does injure somebody, that's going to be between you and the person that's injured. We're not going to step in with liability coverage. Age of wiring isn't too big a deal for us generally, because a lot of the homes that I'm seeing that were built in, the 1910s, 1920s, folks have done a great job of updating those. There's a lot of beautiful homes in the Tower District now that have been completely renovated that are just fantastic. Things like being on fuse boxes as opposed to circuit breakers, and having knob and tube wiring. So just really old utilities, those can be an issue as well. Same kind of thing. They may cut down on our options or increase the price. They're not uninsurable, but it may be a little bit trickier. And that's really, I think those are the major ones that I'm seeing are claims history, roof condition, and then utilities.
Anything different with regards to a home on a concrete slab versus having a basement or having the subflooring in there or anything like that?
Yeah, really the only thing that's generally going to impact is the overall pricing, just because the replacement cost is a little bit higher. So as I'm going through and doing, the replacement cost estimate and saying, oh, okay, great, this home is, this many square feet, it has, maybe it's 10% brick facade out front, things like that. Sub flooring, wood subflooring is just more expensive to rebuild because what we're looking to do is completely rebuild that home the way it was, basically the day you sign on the dotted line. So if there's, materials there, they're going to be a little bit more expensive. That just factors into the replacement cost. So there's not, necessarily like a surcharge or something for it having a basement. But when we look at it, they just go, hey, building out, a partially finished basement, more expensive than just a concrete slab. So, maybe that home is now, $50,000 or $60,000 more on the replacement cost estimator than it would have been with just a straight concrete slab. So the pricing is affected in that way. But in our area, I haven't had any eligibility concerns because we don't have a ton of flooding issues. Now, if you're in, Houston or Louisiana, now obviously they care a lot more about, hey, do you have a basement because we're below sea level, and that can be bad times. Speaking of which, flood coverage is not generally a big issue in our area. There's a few outlying areas normally in the South Valley where you might get some areas where you have to have flood. I see that more in like Hanford in those areas. Not too much in Fresno or around here, unless there's a couple of spaces like right next to a canal that maybe those are rated as higher flood and they might require it. But generally speaking, we don't have to worry about flood insurance in most of the Central Valley.
Okay. So what would you say is maybe the most expensive type of home to insure? So if a buyer is maybe concerned about that a little bit, what should they not be looking for?
Yeah. So some of the things that can obviously, impact it are just age. Some carriers surcharge more than others because, again, they're really just primarily they're looking at age of utilities. So, they say, hey, if the plumbing here is 80 years old, we feel like legitimately we have a much greater chance of having a water leak here than we do for a home that was built in, 2021. We feel like those pipes are pretty new. We're probably good there. So some carriers factor age in a lot more heavily. So if you don't have proof, even if it's just permits of utilities being updated, older homes, and I mean, 80 to 100 years old, those can be a little bit more expensive. So some of the stuff like we see again, in the Tower District and some of those areas, roofing material, obviously, things like tile that are not permanent, but, significantly longer lived. A lot of carriers kind of incentivize that because they just feel like, hey, the odds of us having to replace your home or replace your roof due to, wind damage or something like that, significantly lower with a tile roof than it is with, comp. Swimming pools.
Yeah. What about pools? I was just going to ask pools. How much does that raise?
Yeah. And, that one's really funny because I've got some carriers like, so Oregon Mutual, for example, they don't care that there's a pool there. You mark it on the application, like they want to know and they ask them details about it. Doesn't impact the premium at all. They just want to know. Some carriers like Progressive, it does increase the liability cost of the policy. And then they also won't offer coverage if there's a diving board or a slide. And then some carriers, there is a pretty significant surcharge just for the pool being there. Hippo, Mercury, Travelers, just the carriers that I work with. I can't speak firsthand for, like Farmers or Allstate. I don't want to speak out of turn with the way they work. But the carriers that I work kind of run the gamut of it's either a surcharge or they don't care. They just have some eligibility guidelines around it. But yeah, swimming pools, can definitely drive it up a little bit or limit your carrier choices. Detached buildings. So again, we don't run into it, most of the average homes that we're looking at in Fresno and Clovis, they're not going to have a detached garage or, a guest house or something like that. But obviously, kind of the more property that we have to cover, the more expensive the policy is going to be. One of the things that doesn't impact it too much is acreage, usually. So, assuming there's no fire concerns, right? But, if we just take a house and say, hey, there's no fire concerns here, but we're on 5 acres, most carriers don't care about that because they're not insuring the land, they're insuring the buildings on it. So that's one that kind of surprises people. They're like, yeah, I don't care that you got 2.5 acres. I care, do you have a detached garage, a guest home, something like that. And then the size of the home as well. So obviously, if we're looking at, hey, it's $250 per square foot to rebuild. Well, if you've got 5,000 square feet, it's more expensive than 1,300. I think that's, kind of common sense, but still mention that. And then zip code by zip code, obviously. Oh, I'm sorry, go ahead.
What about ADUs? Those are pretty hot, obviously, right now. What should a homeowner be looking for if they get a home and they have the ADU and they're planning on renting it out for extra income? What should they be looking for as far as coverage and maybe some additional costs there?
Yeah, that's a fantastic question. And that one's kind of funny because just like you guys, the insurance carriers are kind of new to that whole ADU thing as well. So it's, kind of, I won't say in flux right now, but I think what that looks like probably 2 or 3 years from now is going to be a little bit different than right now. What I'm frequently running into now is what a lot of carriers are doing is saying, hey, if you were going to have a tenant, basically go ahead and mark that, let's say the home address is 123 Main Street. We're just going to go ahead and call the ADU 123 Main Street, unit B or something like that, and just go ahead and write that as a rental property. And, we're just going to have 2 separate policies. That's kind of its own thing because you have a full-time tenant there, and we're going to leave it like that. Some carriers do have the ability to basically just endorse that on the home policy. What they'll call it is like detached structures rented to others. So on some, you can just go ahead and check a box and say, hey, we also need another, $230,000 in coverage for, this, and they'll ask some details, and you'll say, 1 bed, 1 bath, ADU with a long-term lease or something like that. But yeah, that's generally where it's at. Is most carriers are going to say, write a separate rental policy, just like it's its own building. And then a few will just go ahead and endorse that and add it there. So it shouldn't really be too tricky. Just obviously understand that, you're basically insuring a whole other, albeit small, a whole other house. So, kind of price accordingly on that.
Now, what if it's a non-permitted ADU? What if they have called a garage conversion or something like that? Would that make a difference?
So generally speaking, what I tell folks is I don't pull, and insurance companies don't generally pull permits for stuff. Basically, what we're looking at is if we go to rebuild it and there's a reason that we can't rebuild it, let's say you didn't get a permit for it, house burns to the ground, the insurance company says, hey, we're good for the, X amount of money to rebuild it. We go to file permits with the city to rebuild it, and the city now says you can't rebuild it that way because that permit wasn't there in the first place. That's going to kind of be between, the homeowner and the city. Insurance carriers, generally speaking, I won't say they don't care, but that's not really, their realm that they look into. They basically say, hey, we insured the home this way. When we go to rebuild it, this is how we're going to try to rebuild it. If the city says no, that's kind of between you guys. You should have double checked in the first place. But I haven't ever had an issue where we can't insure the home or, they decline coverage because there's, as long, obviously, as the work is done, in a reasonable manner, obviously, if it's not permitted because it's just, a disaster.
Okay. So I guess one more question.
Yeah.
We're seeing a lot of seller in possessions post-closing right now, anywhere from just a couple of days to maybe a month or even up to 2 months.
Yeah.
What do you recommend there for the new homeowner who has now become a landlord for a period of time?
Yep. Fantastic question. Yeah. I should have mentioned that because those are, things that we probably didn't see too much 5 or 6 years ago. Now, I'm seeing it on almost a weekly basis just because, hey, the timelines are just getting so crazy on, maybe this home closed faster than they thought and they're waiting for the other deal to close, those types of things. It's going to vary carrier to carrier. I'm sorry, I hate saying that, but it's the truth. Kind of everybody has their own underwriting guidelines. Yeah. Kind of generally speaking, what I'm finding is if it's less than 30 days, most carriers are okay with that because on their application, they basically, because they understand you're going to be moving into a home. So they generally say, I'm signing off on this application saying I plan on moving into the listed address 123 Main Street within 30 days of the effective date of this policy. So the underwriters that I've spoken to have generally said, hey, we understand, it happens. Sometimes they want you to make a note of it and just say, hey, understand that, for roughly 17 days, we're doing a rent back. This is the scenario. And they say, okay, great. We just have it on file. Let us know if it extends longer than that. Generally speaking, they're going to be okay with it. Just make everybody aware. I have had some carriers that have said if it's going to be more than 14 days, you need to initially write this as a rental policy and then switch it to a homeowner's policy. Obviously, that is not ideal for a number of reasons. One of the major ones being the guidelines of the loan. So some loan programs are not going to let you submit a dwelling policy when it's a primary residence. So that can be, kind of one of the hiccups. Some carriers, like Berkshire Hathaway Guard, for example, they're a little bit strange in that they just have one home form. Basically, they don't have a separate dwelling policy that they use in a separate home policy. They have a home policy and then they just mark it, a tenant lives here. So with them, when I've spoken to them, they say, oh yeah, write the home the way you were going to, and then just mark it's tenant occupied and then just, switch it back 30 days in. So with them, it's pretty painless because it's the same form, same policy number. They don't do a rewrite or anything. They just make an adjustment. We run with it that way. But generally speaking, I would say if it's going to be less than 30 days, you are probably okay with most carriers. Have your agent contact underwriting and make sure they're okay with it, but you should be okay most of the time if it's less than 30. If it's more than 30, most of them are probably going to ask that you write that as a rental dwelling.
Okay, so something the new homeowner should definitely mention to insurance though,
Yes,
to make sure they are going to be covered. Let's
Yep.
say in those 14 days, something does happen with the house, that they're not excluded from coverage.
Yep, absolutely. And then one of the things that I always advise folks is just have your tenant, for lack of a better term, have them get a renter's insurance policy. It doesn't, I'm not like trying to upsell people. It doesn't have to be through me. Like have them call their, guy or gal that they work with. Renters insurance policies, depending on what you're looking at for the coverage, we're generally looking at somewhere between, like 10 and $30 a month on average. Usually you can cancel that with no fees, depending on who the carrier is and kind of what the setup is. So I normally say, hey, go ahead and get that just in case something goes wrong. That's going to cover their property. And if they do something silly while they're there that leads to a loss to somebody else, now they have liability coverage in place. And, you as the homeowner can basically step back and say, hey, take that up with John Doe and his policy. We had nothing to do with that. They were the tenant. They've got their own coverage there. So I know it's an inconvenience, but I think, for 15 or 20 bucks, it probably is better served for everybody to be in that situation than, that coming back on the new homeowner.
Yeah, probably something we should at least be opening the conversation on with the home buyer, basically, on looking into that just to make sure. So just on a risk management basis. So really, it sounds like it has nothing to do with our legal jargon, because it's 29 days or less for us is technically a license to remain in the property.
Yep.
But 30 or more is going to be on the lease terms. So really, it has nothing to do with that. It's more carrier to carrier is what you're saying.
Yeah. Yep. That has been my experience because I've done these with, a half dozen different carriers and gotten, again, generally the response is going to be 30 days or less. Obviously the new carrier is not thrilled with it, but they get it. And then I've only had, I think Encompass was the only one that, and they even said they didn't technically have it in writing. Kind of their rule of thumb was 14 days. So they get a little bit hesitant outside of 14 days, but they didn't specifically have anything in writing. So with them, I basically said, well, it's going to be 17. You guys are going to deal with it unless you have it in writing. And they said, yeah, well, we're not happy about it, but we're going to deal with it and we'll extend coverage. So.
Okay. Cool. Well, I think this was really informative. I don't know if anybody has any questions, you could throw them in chat real quick, but I do appreciate you coming on. We did put your phone number and your contact info in the chat. We can send that out with the replay as well.
Cool.
We usually have about another 2 or 3 times views on the replays. So other than that, anything you want to close with before we jump off?
Just thank you so much for having me. Oh, and one last thing, if you don't mind, I always let folks know, because frequently I get questions of home warranty versus home insurance and kind of which do we need both? I always let folks know home warranty. And, again, I'm not a home warranty rep, but I have had conversations with a lot of the local reps. And really what you're looking at with home warranty is that's going to be more maintenance type items. So, your garbage disposal is on the fritz. We need our AC serviced, things like that. Your home insurance, that is for actual like direct physical loss. So that is, hey, we had a fire, or, the fitting broke on the washing machine and flooded the home or the apartment or, the condo, whatever it is. So just kind of the rule of thumb that I generally tell folks is maintenance type stuff, service issues, that's home warranty. Home insurance is going to be for your actual larger losses, direct physical damage to the home. It's always great to have both. They shouldn't ever overlap. There shouldn't be a time where you go, oh man, there's no reason for me to have both of these. They should be distinct. So yeah, that's one of the other frequently asked questions that I get. But other than that, no, just thank you so much for having me. I really appreciate it. I believe my contact info is posted in the chat. So folks, if you need anything, feel free to reach out to me. I work a lot. And looks like Annie had a question. As a realtor, how can you help to provide value? That's a great question, Annie. I think really, just being involved in the process and just having kind of a heads up on some of the red flags that we talked about. As soon as you look at it, a client comes to you and says, hey, I think this listing might be great, or you look at one that you think might be a good fit for them, just be aware of, oh, okay, this one has, an older roof, or, it has a swimming pool with a diving board. Just be aware of, hey, these are some of the things as a client you might want to make sure that you mention to your insurance person, and, it might impact the rate. The clients that I've had that have spoken really glowingly of their real estate agent in the transaction. That's been one of the things that they've said is, oh, they were so great for, letting me know, hey, this home was in the foothills. Make sure you get some quotes first because, it might mess with your budget. So yeah, I would say just being involved and just letting the clients know, start in the process earlier rather than later, because that's just going to make it, more comfortable for everybody.
And with that said, if we can be reminded that the insurability of the home is included now within the inspection contingency period. So if you're releasing the inspection contingency early on, within 10 days and you don't have your insurance quote and, you're doing that right at the end and you find that insurance is going to be too high or, you can't get the fire insurance or whatever, then you've already released that contingency, guys. So early is best, get your insurance quote during that inspection contingency timeline. And that'll just help everybody, make sure that it's a much smoother transaction and not have any hiccups a little later on due to insurance, because that does happen. That, in the past, everybody does wait until the end, it seems like, to kind of get that insurance quote. But now we definitely need to be in the mindset of shifting that towards the beginning of the transaction now. So. Awesome. Well, again, thanks a lot for coming on. I'm sure we'll have you on again, and maybe we'll dive deeper into some fire stuff and some other questions. So,
sure. Yeah, absolutely.
Right.
Thank you so much, guys. Everybody have a great week. Really appreciate it.
Awesome. Have a great week, guys. We'll see you.